Hello, welcome to all the viewers of today's webinar. In the course of the next 1.5 hours, I will be taking you through very important aspects relating to multiple supplies provided together along with judicial precedents, interbranch supply of service, including the specific aspects of cross-charge as well as IST. I will be explaining each and every of these concepts along with practical examples which would have come across in the day-to-day interactions with the various clients that we do have. Without much ado, I would like to get into the main part of today's presentation. GST, as we all know, is a tax on the supply of goods and services. It is levied on goods, goods being every kind of movable property. Example, mobile is goods, other than money and securities. Services is anything other than the goods. So it has been defined in a very comprehensive manner to cover anything which is other than the movables. Services could be examples, could be mining service, could be consultation service, and there are various numerous services which can immediately come to any person's mind. Next, we look at a quick snapshot of what is said to be supply. Supply is defined in an inclusive manner to cover all forms of the supply of goods and services, be it by way of sale, where there is a transfer of the title, let's say to the goods. To continue with my earlier example, a mobile. Transfer of goods by one person to the other. It could be barter, which is the exchange of goods for goods, goods for service, service for service. And also they can be exchanged, wherein, say, a service or goods is exchanged for another goods or service wherein a price is fixed for the same. Licensing could be there by way of a supply, rental, lease, disposal of goods, etc. One more very important aspect here, which is relevant for our deliberations of today, is the supplies which are done without consideration, which is covered in Schedule 1 of the GST law, wherein it is very clearly covering the supplies of the goods or the supply of the services which takes place between distinct persons. When I say distinct persons, we are talking about the supplies which are done between the branch offices, which may be located in different states. Though these branches are all forming part of the same legal entity, but even these supplies are said to be taxed, even if it is made without a consideration for the same. I will cover it in great detail a little later in the course of my deliberations. Next, I come to the very important concept of composite and mixed supply. Today we are looking in the context of multiple supplies. Multiple means more than one. When there is more than one element of supply which is involved in any transaction, then in that context, we will be looking at what is the GST implication of these kinds of more than one supplies, be it of the goods, be it of the services, be it of both, for which first I will take you through composite supply. Composite supply is one which is made up of or comprised of two or more taxable supplies which are naturally bundled in the normal course of business of the supplier, wherein one of them is the principal supplier. And the treatment would be based upon what is the principal supply. You may ask, what is meant by a principal supply? A principal supply is one which is predominant in the entire bundle or in the entire bouquet of offerings, wherein I can give you a couple of examples. One could be when there is a supply of goods, say a machine which is being supplied. And along with the machine which is being supplied, there are incidentals, which could be the services of inspection, of packing, of handling, of transport. So when all these are being supplied along with the predominant supply, herein the predominant supply would be one of goods of the machine. How do we identify? It's very simple. When there is more than one kind of supply which is being put together and given, wherein if you take away the main supply, the incidental or the ancillary supplies cease to exist. So the incidental or the ancillary supplies do not have an existence or do not have a life apart from the principal supply. In another way, if I have to put it, the incidental supplies are only for the purpose of better enjoyment of the principal supply which is there. Consequently, when we come across this kind of a supply, in this example of goods, the tax treatment would be based upon the principal supply, which is of the goods, and the tax rate to be applied is the one which would apply to these goods. In this case, it is very clear. Now I come to an example for services. If there is any person who is engaged in providing education, side by side along with it, there is also supply of food, supply of accommodation, supply of toiletries. There could be a supply also of stationaries. There could be various other recreational facilities, internet which is being given, along with the education which is being supplied to a student. Herein, which is predominating supply. In all these bouquet of supplies which is done, the predominating supply is education. Because the student is not coming for the purpose of getting the accommodation or for the food. He or she is coming for the purpose of education. To take away the education, the rest of the other supplies will cease. It will not exist. So the tax treatment in this case also would depend upon the education, which in my example, it is an exempted education. Say a school education, for example. Okay. Now we come to a non-composite supply. In the context of a non-composite supply, there are various independent supplies which are being done. These may be given under separate invoices, separate agreements for a different separate price. In this case, there is no concept of a predominating supply. An example could be, if there is a separate supply being done of a refrigerator for a price, say 50,000 rupees, a separate supply of a motor vehicle being done at say 4,50,000 rupees, then on this 50,000 rupees, there will be the tax rate which will be applied, which is there for the refrigerator at 18%. And for the motor vehicle, it will be there at the tax rate of 28%, which will be made applicable for the 4,50,000. These are independent supplies, wherein these could be construed or considered as non-composite supply. Next, we see what is mixed supply. Here also there are two or more independent supplies which are involved, which is being given for a single price. But keep in mind, a mixed supply is one which is not a composite supply. I already explained to you the essence of what is a composite supply. So then this mixed supply, which is made of two or more independent supplies, which are not normally or naturally bundled and being supplied together. However, it is being given and offered for a single price. It would be treated as the supply of that particular supply of item or component, or be it a goods or a service, which attracts the highest rate of tax. An example which immediately comes to mind would be, if there is a supply of the flowers, the chocolates, which is being done for a single price of say 5,000 rupees. Chocolates may be of 4,000. 1,000 rupees could be for the flowers, but there is no breakup as such which is given. A single price of 5,000 is being put there. In that context, the tax which will be applicable, which will be at the rate which is applicable for the highest rated item in this entire mixed supply, which is the one which applies to the chocolate, which is the rate of 18%. However, I will give it a slight twist. Instead of putting 5,000, if there was a breakup which was being given as 4,000 and 1,000, 4,000 being for the chocolate and 1,000 being for the flowers, then yes, it is very much possible to say this is a non-composite supply, and the 1,000 rupees need not be offered to tax, and only on the 4,000, 18% tax would require to be paid on the value of the chocolate. Next. So if I had to summarize it for you, I would say the tax liability for a composite supply, which is comprising of two or more supplies, wherein one is said to be a predominating or a principal supply, would be treated as a supply of the principal supply, taxed accordingly. Herein you may say, how does one determine if more than one type of supply is being bundled and given in the normal course of business? What is this normal course of business, you may like to ask? And I would say, a normal course of business means, from the perspective of a supplier, assume that there is a person who is, while giving training services, he is always giving it along with the stationery. He is also giving along with that, he is also being supplying food. In that kind of a situation, it may be said for him, it is a composite supply wherein the predominating supply is the training service, because in his ordinary course of business, when he gives the main supply of training, he is also giving the accommodation. He is also giving, let us say, a facility of stationery. He may also be giving, say, an internet facility, but which will be the predominant supply? It will be that of the training. Tax treatment will be based upon the supply of the training. Even though the facility of canteen, which he may be giving the food in, may be taxed at a 5%, but still, since the essence of the bundle for his business, in his normal day-to-day course of the operations of his business, is coming through from the training service, the entire thing will have to be taxed at the rate of 18%, which is applicable to training service. Here, one more interesting aspect could be, is it that for a composite supply, it has to be priced at a single price? Can there be a breakup in the pricing? How should it be? I will go back to my first example, which I gave you. That is of the machine which is supplied. Along with that, we have the various services. Say the price of the machine is coming to 1 lakh. In addition, 5,000 rupees is towards the packing, 2,000 is for the inspection, 3,000 is for the handling. Keep in mind, even though a breakup is given, it does not mean that each of these separate breakup items are separate supplies. It would still continue to be a composite supply, very much to be taxed based on the predominating supply, which is that of the machine. Here you may say, then does it mean that if I have a single price, will that be an indication or a proof that it is a composite supply? I would say no. Please see what is the main supply which is there, what are the incidental supplies which are there, and if these are being bundled, put together, consolidated and being given, regardless of whether a single price for a machine of 1,10,000 or it is being given as 1 lakh plus 5,000 plus 4,000 plus 1,000, doesn't really matter. You will still tax it as a composite supply. You will still be treating it based on the predominant supply, based on the primary supply, based on the principal supply, and it will be classified accordingly. It will also suffer the tax accordingly as a supply of the machine. Coming to the mixed supply. This comprises of 2 or more independent supplies which can be given separately also. They will be a customer even if it is given separately. Coming back to my earlier example, even if you were to give the fridge or the motor vehicle separately, there will be customers who will come separately for each of them. But if first it is being put together and given for a single price, and it's not a composite, because in the ordinary course of business, persons may not be, the suppliers may not be giving a bike or a vehicle and the fridge together. Then it will obviously be treated as a mixed supply and taxed at the highest rate, which is 28%, which is applicable to the supply of the vehicle. As I said, for a non-composite supply, you have to be very, very careful. What may be construed to be these non-composite supplies, which are nothing but independent supplies, which are independent of each other. What is the payment towards each of these supplies, be it the goods, be it the services, accordingly to be classified, accordingly to be taxed. Next, I've given a couple of the examples over here. When there is transportation along with the goods, wherein there are multiple tax rates. When there is, let us say, handling along with the goods, wherein multiple tax rates are there. Example which comes to mind, the coal which is being supplied. Coal is taxed at what rate? At 5%. Coal is goods. But the handling charges may be taxable to 18%. Now, if there is a person who is collecting, say 1 lakh rupees towards the goods, that is the coal, and 5,000 rupees towards the handling charges, total being collected is 1 lakh and 5,000, what should be the tax rate applicable? Should it be at the rate which is applicable to the coal, which is at 5% on this entire 1 lakh and 5,000, or should it be that separately in respect of the handling charges alone, 18% tax to be paid? I would say no, it is a composite supply. Kindly treat it as an entire bundle wherein the predominating supply is that of the coal. And the coal would be taxed at the rate of 5%. So therein on the 1,05,000 also 5% needs to be applied. Sometimes we will not only do a supply of the goods, but there could be installation, there could be the erection of a machine on the site. So here also we need to see, is it a composite supply where the predominating nature is that of the goods? Or could it be said that it is a works contract? Because what is a works contract? It is a contract wherein the material and labor are involved and it will be resulting into an immovable property. Okay. So herein I would say that if the nature of the supply is one wherein the goods are being given, an example could be, let's say, a CCTV cameras and equipments. The entire thing may be getting installed in the premises, but if you see, the main supply there is that of the equipments. And whatever is the installation, the wiring, the circuitry, all that is secondary, it is incidentally being done. And nobody is coming to the supplier for the purpose of the installation. If he is a well-known and his USP is that he is a CCTV supplier, then probably the people are coming to him for the purpose of procurement of the supply of the goods. Similarly, for furnitures and fixtures, which may be getting supplied and then subsequently it may be installed in the site. Let's say there is a display cabinet which is getting installed onto the premises of the customer. Therein again we need to see, is it a supply of the goods? Contract could give us a lot of the insights. If we see what is the intention of the parties, if it's very clear it is for the purpose of the supply of the furniture and its installation, and let's say an amount of 1 lakh is being collected where 95,000 and 5,000 is installation, therein I would say it is still predominant nature of supply is that of the goods. The services of the installation are secondary. Okay. What happens sometimes if there is a mix-up? A mixed supply gets classified as a composite supply and vice versa. Sometimes it may also so happen that in the same transaction, we have a taxable item and we have a non-taxable item. We have something which is excluded from GST levy. We have something which is taxable to GST levy. Therein, what should be the treatment given? The immediate example which can come to mind in the context of a developer, I would say, is wherein there is a person who is a developer who procures the land, undeveloped land. He converts it. He will get the requisite approvals which are there. Therein, he then goes ahead and based on the plan which has been approved, he goes to develop the land. He puts the fence, he puts the infrastructure, electricity, he puts the roads, he puts the parks, he may be putting the sumps, the water tanks. So all these facilities he will do. He will demarcate the plots and he will get customers, obviously. Now, this can be done in two ways. One, wherein there is a customer who comes to him, enters an agreement at the stage when the entire development work is completed. So what is it that the customer gets? What is the intention of the entire transaction is only to give a land, to give away a developed land. Land is covered in third schedule. Land is excluded from the GST levy. So herein, the intention is very clear. Agreement to sell is entered only for the purpose of conveyancing the developed land. Sale deed also is done for the same. And agreement to sell may be for 500 rupees per SFT. Sale deed also for rupees 500 per SFT. And there is no question of GST in this transaction because this kind of a sale of the developed land also would be excluded from levy. However, now I give a slight twist in this. I say that what if in the course of the development works which are being done, the customer comes in. He still enters an agreement to procure the developed land with the facilities for 500 rupees per SFT. He enters an agreement to sell for that with the developer. Sale deed also is done for the same. Stamp duty also is being paid on the same value per SFT. Could it be said that entire transaction is for the purpose of getting the plotted development service? Because keep in mind, if we go back to L&T decision of the Supreme Court under the erstwhile VAT regime, it said that if there is any agreement which is entered and payment which is received from the customer in the course of the construction by developer, it is a works contract. And today in GST, a works contract is treated to be a supply of the service, which is a composite supply, but nevertheless a supply of the service. So could it be possible that on this entire consideration, GST may be demanded on the entire 500 rupees? I would say this may not be the intention. First of all, what is the intention of the parties to the contract? It is to get the developed plot of land. That in itself is excluded from the GST levy. However, where the developer wants to take a very, very safe stance, then only to the extent of the determined value of the development charges could be 50 rupees per SFT in my example, he could offer it to tax at 18%. Taking a very, very abundantly cautious approach. Then what happens if he's collecting post the development, is collecting towards the membership of or the maintenance of the plots? In that case, definitely for the maintenance charges which he collects separately as a developer from the various customers, it could be taxable at 18%. One more related example, what if there is an agreement to construct and sell a flat and the customer comes to the developer in the course of the construction being done, and there is a consideration attributed of say 60 lakhs towards the flat construction, and in addition there is also a 5 lakh rupees which is being recovered towards, let us say, a car parking which is there, towards, let us say, the floor rise premium. Does it mean to say that this car parking and the floor rise premium should be taxed at the rate of which is applicable for the flat, which is 5%? Or should it be taxed at 18% on the floor rise premium? Could be Vastu compliance charges, car parking, like I said. So I would say again it is a composite supply, because the person is coming for the construction service of construction and sale of flat to the developer. These are all incidental. Floor rise premium, Vastu charges, car parking charges are incidental. So treat it based on the predominant supply, offer it to 5% tax, including the land value. What happens if there is, coming back to my earlier example, accommodation, food and transportation which is being provided? Again, it is a composite supply wherein the predominating nature could be the accommodation. If it's a hotel which is being given this accommodation and it's also giving the food, okay, then again it may be treated to be a composite supply. But if it is being taken independently, separately in the restaurant section, then it could be said that to that extent this is a separate independent supply which is being taken by that particular customer. Okay. Coming to comprehensive maintenance contracts, there could be some contracts for maintenance of printers, computers, which is being entered, wherein there is a clear-cut mention telling that an amount of say 15,000 will be recovered towards the maintenance per month of the computer or the printers. But in case there is any specific parts also which are being replaced, that also will get covered in this 15,000. In that case, I would say the tax treatment will be based on the predominating supply of the maintenance services. Even though the parts, some of the parts may be getting taxed at 28%, I would say on the 15,000, treat it based on the predominant supply of the maintenance services, tax the entire 15,000 at 18%. Next. What if there are some turnkey contracts wherein it involves supply of goods and services, both movable and immovable in nature? Therein what happens is that we need to see again what is the intention of the parties. Is it that by installing and the delivery it is being handed over as an immovable property? Whether it will fall into a works contract, accordingly we need to treat it for tax. What if alcohol is given along with food and beverages? Whether it is said to be a composite or a mixed supply? I would say alcohol is excluded from the tax net. So to that extent, GST need not to be paid. Only to the extent of the food and the other beverages, tax could be paid as applicable. Okay. Next. What could be some of the important issues which are there in the context of multiple supplies? Like I said, if a mixed supply is wrongly classified as a composite supply or vice versa, the consequences could be disastrous for a business. Example could be Actually, the GST on the principal supply could be getting paid at 12%. Whereas if it is actually of the nature of a mixed supply, later they come to know it will be taxed at 18%. To come back to the earlier example, if a motor vehicle and refrigerator supplied for single price, then it should be taxed at 28%, not at the 18% which applies to the refrigerator. And if there has been a wrong determination of nature of supply to be as a composite supply, but later it is found to be a mixed supply, or if it is found it is to be taxed at a higher rate, then the difference of the tax, interest, penalty also may be required to be paid. There was one client who was engaged in making certain supplies of agricultural machinery and its parts. Those were taxed at 5%. Therein, one of the items was a rubber roller, which is covered in chapter heading 4016. For that, there is a specific classification which is available, which is applicable. And there is a specific tax rate also which is applicable for it, which is at a higher rate, not at 5%. So here what happened, they were treating it to be a part of the machine itself, the agricultural milling machine, and they were offering it to tax at 5%. But obviously, whatever is the treatment which they were giving was not correct, because there was a separate classification. It could not be classified as parts of the agri-milling machine in 8437. However, they then voluntarily came to this realization after they interacted with us, and then they discharged the liability along with the interest. They had sufficient credit, so obviously, there wasn't that much of an interest implication upon them on this liability. Okay. Next, some other issues which are there in the context of multiple supplies. We need to see, first of all, is there a supply of goods or service before we go to the issue of multiple supplies of goods and services or both. Because sometimes there may be a scenario, like I said earlier, wherein it's only a transaction of supply of the land. Therein there is no question of GST at all. Just because there is some terminology which is not being correctly termed, there could be doubt. In these kinds of situations, it is always suggested to get a confirmation from an expert. Whether the erstwhile customs, excise related provisions, the laws can be relevant. I would say customs tariff is very much relevant, could be referred, especially in the context of classification of goods, to come to the correct conclusion. Read it along with the case laws which may be there under customs and central excise in the context of different goods, right from a pin to a plane. We do get a lot of clarity, because even classification is to be done based on the customs tariff. The HSN, which is the Harmonized System of Internationally Accepted Methodology of Classification for the Goods, under the chapter headings from chapter 1 to chapter 96 for different kinds of the goods, which could be there, right from, I would say, a pin to a plane. Okay. And also look at the explanatory notes in detail along with the section notes and chapter notes of the tariff in order to arrive at a completely correct classification. So the old case laws would be definitely relevant even in the context of multiple supplies being done of goods. Similarly, also for the services, there is a separate classification related HSN, SAC codes related commentary which is shared, which is available in the public domain, which may be looked at for getting a clarity on what should be the classification or the rate which is applicable for the specific supply of services. In case there is a change in a rate or a classification, should it be going ahead or also applicable for the past? I would say it would be applicable going ahead unless there is some clarification that it should be applied even for the past period. Can we rely on tweets, FAQs, guidance notes, clarifications, advanced rulings, circulars? I would say whenever it is in line with the law, yes, it may be relied upon. When it is not, some are contradictory. Like in relation to printing, there are so many circulars which are contradicting to each other. So therein, whichever is not in line with the provisions of the law, those may require to be treated as not valid. Okay. However, coming to the specific aspect of the advance ruling, I would say an advance ruling is something which is given by the lower levels of the officers. It is given by an officer who could be a joint commissioner. It is not coming from the higher echelons of the judiciary. So even if an advance ruling is there under GST, what an SSE may like to do is be aware of it. However, only if it is in your favor, probably you can think of using it for your own purpose. But if it is not, only thing is that the advance ruling will give is that what is the thought process of the department, which is very important to be known because it is very critical for the SSC. What is the view which is favored by the department? What is the view favored by the officers? Okay. And keep in mind, there was a ruling of Tata Melting Wires wherein they said in the Supreme Court that whatever is a circular which is not in line with the law, that is non-est or invalid. Okay. In case there is a reclassification and the revenue wants to change the classification, like I told you the example of that SSC who's our client, they used to classify the rubber rollers under 8437. Department also came back to them subsequently around the same period and said, you should classify it in 4016, the rubber rollers, because there's a Supreme Court judgment also of Kohinoor in their case, which was directly applicable to them. Of course, if revenue wants to change revenue, the burden of changing the classification with reasons is on the revenue. But in our case, of course, the SSC himself around the same time when the department was reviewing all their transactions, they themselves on their own, they had changed, they had put it into the classification of 4016, which was the correct one, which was applicable, voluntarily paid the taxes also, differential tax. Okay. Next, I come to some other issues in the context of multiple supplies, which may be there. One is the sale of scrapped goods and the compensation for which was paid by a foreign customer. Again, I'm giving you live examples which have come across in our day-to-day interactions with clients. Okay. Herein, initially the contract had been placed by the foreign customer to procure the goods worth ₹1 crore. Then the foreign customer said, because of the various vagaries of the market, they do not want those goods. They said, instead, in order to keep up our good relationship, we will pay you the 1 crore rupees, but it is nothing but given as a compensation for not fulfilling the contract. Okay. Here the question comes, first of all, that 1 crore, which is for the goods which were manufactured by the Indian supplier, whether it should be offered to tax, because remember, the goods were scrapped and these goods were sold in the domestic market within India. Should 1 crore be offered to tax because those goods which were manufactured in Bangalore were sold in Bangalore? So CGST, SGST, is it required to be paid on these goods on 1 crore? Department may certainly like to think so. But if you went closer and in depth in the transaction, the compensation was clearly being paid by the foreign customer, not for the goods. They were not taking over the goods. The goods were not being transferred to them. None of that was happening. Instead, they were only paying for having withdrawn from that particular obligation or for as a compensation for not fulfilling their part of the deal. So herein keep in mind whether it can be said to be a supply at all, because when the goods are not being given, nor is there any activity which is being done against the 1 crore by the manufacturer in India, could it be said that there is a supply at all of goods or service or both? In which case we can also say the levy itself should fail. My view, it's very much possible to take that contention. However, even assuming that it's taxable, assuming that there is a supply, probably if at all it comes in anywhere, it would get covered as a supply of service, probably in the Schedule 2 item, which is relating to the supply of the services covered in Schedule 2 of tolerating the act or the situation, toleration of the act of having cancelled or scrapped that particular order which was placed for the goods and a payment towards that, and accordingly it could be said it is nothing but a supply of the services. Keep in mind that the Schedule 2 has now got delinked from the supply section, and only if there is an activity or a supply in the first instance, only next then we have to come to the Schedule 2. But in my view, first of all, there is no supply. Even assuming there is a supply, it could be at best be said a supply of the service, in which case we can very well say that the supply of the service has taken place to the foreign recipient who is located outside India. Payment also was received in foreign currency. The supply done against a LUT and no requirement to pay GST, it could be treated as export of service. Credit corresponding to it may also be available. Coming to the classification in the case of a composite supply, whether the GST has to be paid for the entire supply, like I earlier told you. I give you an example of a AC and its installation. Obviously, once it is installed, it is put there, it is fixed up with the cement and installed there. Could it be still said to be a supply of the AC, or is it resulting in any movable? I would say, what is the predominant nature of the supply? It is a AC. What is AC? AC is a movable goods. The installation is incidental to it. Also, the tax rate to be applied is that which is depending upon the principal supply of the AC, which is goods, which is at 28%. Classified also accordingly, and tax rate to be paid on the entire thing. Let's say 35,000 for the AC and say 10,000 for the installation. So on the entire thing to be paid at 28%, unless there are two separate work orders which are not interlinked, which are not coterminous with each other, which does not require both obligations to be fulfilled simultaneously by the supplier, and the non-fulfillment of one does not lead to cancellation of the other, then we may still say, we may still conclude it's an independent supply and tax the AC at 28% and installation at 18%, only in that situation. Now, what happens if multiple supplies are being wrongly classified, leading to a wrong tax rate being charged? Herein, if I see, one example could be a restaurant service. The restaurant is giving a service versus treating it to be a supply of food, taxing only the food portion at the rate which is applicable to the respective food or beverage item. For restaurant service, subject to some specified conditions, one of the conditions is credit should not be availed. Tax can be paid at 5% output GST. But what may happen sometimes, the tax may be paid on certain items which, let us say, are being supplied of the food or the beverages at the higher rate, say 18%. Therein, the department may certainly come back and say, even this is forming a part of the restaurant service. It's a composite supply. The predominant supply is the restaurant service. And they will not question for the 18% which was output tax paid on the supply of, say, a beverage. They may be questioning the incorrect input tax credit availment itself. It may definitely be a very much defendable proposition telling that when I'm paying the output at the higher rate, the input credit also should be available. However, the SSC may have to undergo this litigation and the travails associated with it. Also, I said, classify the goods and services based upon the HSN, explanatory notes for goods, services, also go to the rules of interpretation. Wherever there is a difficulty in classifying, take the advice of an expert as well. Next. Whether GST can be paid at the applicable rate for each element in the independent supply, I would give you an example for this. In the shop, they may be selling different kinds of idols. One kind of idol may be of clay, which is nil rated. Others may be made of various other metals, which may be taxed at, say, 12%, or some of the items, some showpieces may be taxable at 18%. But for each of these, if a separate price is being fixed, Separately, it is being captured in the invoice in the order which has been placed by the customer. Then obviously the rate which is applicable for each of the goods is to be applied on the value which has been received for each of these items. So in the case of the clay idol, the nil rate may be claimed, and to the extent of the value of the clay idol, there is no requirement to pay the GST. Next, whether the GST has to be paid for each product of the mixed supply, I would say that we need to pay on the entire price which is being charged. However, if separate line items are there, take my earlier example of fresh flowers and chocolates, then obviously you can treat it based on the separate items and the price for the same. Now, very important aspect which has seen lot of litigation under the erstwhile regime about the sale of software, giving of the software by license, giving of the software on a CD, whether it is a supply of the goods or as a supply of service. What happens when the software is given by way of a right to use? What happens when it is given on a physical media? There used to be a lot of confusion. There were a lot of the both the central and the state being levying tax on this of service tax and VAT. But now there is more or less a clarity in the GST law if you see that in respect of the sale of software, if it's in a physical form like on a CD, then it is treated as supply of goods. It will still be taxed at 18%. And if it's given by a license electronically, it could be covered as a service. However, it will still be taxed at the rate of 18%. I have referred to one case law here of TCS, Tata Consultancy Services, wherein they had enumerated upon, deliberated and concluded that software is said to be goods. This is a landmark Supreme Court judgment. With this, I come to some of the legal precedents. The decision references are given. I will explain you the concepts. Always when there is any confusion or there are competing headings in which our multiple goods or services can be classified, we should go by a specific heading against a general heading. To come back to the earlier example, when there is a specific heading, let us say in chapter number 84, wherein chapter 84, 28 subheading covers the elevators or the escalators, then that becomes a correct classification for the elevator. But if that very same elevator can be used solely and wholly with the milling machine, then again the classification will undergo a change. Then the more specific heading will become as a part of the milling machine. So we need to be very, very careful. We should look at all the facts, surrounding circumstances, what is the nature of the goods, where is it getting used, what is the use in the eyes of the persons who are dealing in the goods, what is the primary or predominant function of the goods. Similarly for the services, there have been many Supreme Court judgments that a specific heading should be preferred over a general heading, and it is like Frito-Lay India, Hindustan Poles Corporation, and several other decisions. Similarly, it has been said if there is no statutory definition or guidance, then the treatment or classification to be done based on the common parlance, the primary function and the utility. In a case called fuse base, citations also I have shared. Now, I look at a few advanced rulings in the context of composite and mixed supplies. Keep in mind an advanced ruling is applicable only to the person who has applied for it and for his facts. We can only use it as a guidance by the others. So if there is a UPS and a battery which are being supplied together, in that case it will be said a composite supply, taxed at the rate which is applicable to the predominant supply of the UPS. But if it is being given independently, wherein the battery could be used for multiple uses, then obviously the battery becomes into a separate supply. But still, if it is being given wherein these two are independent and the battery is not integrated into the UPS, then it could be even construed as a mixed supply when both the UPS and the battery are being supplied for a single price. This became one issue at earlier point of time because for the battery there was a different tax rate of 28%. For the UPS there was a tax rate of 18%. Finally therein they said if it is being given as independent of each other, wherein the battery is not integrally integrated into the UPS, then and it is given for a single price, it would be considered as a mixed supply. Coming to one more aspect, what happens if there are some exempted items and taxable items which are given together? For this also there have been multiple advanced rulings which we may be looking at. One immediate example which does come to mind is that of the supply of the medicines and the allied items which are given by the hospital to the inpatients who are undergoing the healthcare treatment for the disease, disorders, etc. Keep in mind, healthcare services is exempted service, but what about medicine? Medicine is taxable. But if it is being given to the inpatient, wherein it is forming a part and parcel of the healthcare services, and there is no optionality to the patient, patient is only coming for the healthcare service, all the other allied items are only for better giving him or better receipt of the healthcare service, then in that case it will be said it is a composite supply, and therein the predominating supply is the exempted healthcare, and even the medicines, the food, the stay, none of that should be offered to tax. However, in case there is an optionality given to the inpatient, telling that he may be even procuring the medicine separately from outside pharmacy, then it is very much possible to say that the supply of the medicine is an independent supply apart from the composite supply and taxed to GST at the rate which is applicable to it, and corresponding credit may be taken on the medicine in such a context. But keep in mind, supply of medicines by the hospital through the pharmacy to the outpatient is very much taxable. There was also AAR in this context. In fact, not one. There have been many AARs which have looked into these aspects. Now we come to the supply of the spare parts, accessories, and repair service. Earlier I gave you an example wherein I said to you that wherein there was the single amount being charged towards the repair service and the parts also were being replaced. Therein I said the predominant supply is the repair service because nobody is coming for the parts alone. Consequently, to be taxed based on the tax rate for the repair service. But if there is a supply of the spare parts differently done, independently done, and the repair service independently being done, where rates are quoted differently, separate work orders are getting issued, then such a supply, it will not be treated to be composite supply. These are going to be independent supplies. Why? Because from the work order itself, purchase order stage itself, invoicing stage, goods services being segregated, separated, and the goods to be taxed at the rate applicable to such spares or the parts, services to be taxed at the rate which is applicable to such repair services. Now, I come to one more interesting aspect wherein multiple services could be involved, that is the intermediary versus the export of service. Herein, there has been a lot of controversy which has been going on over a period wherein it says that if there is any intermediary service or element of intermediary services which is being done by an Indian supplier to a foreign principal or to a foreign customer, then it should be taxed. Who is an intermediary? An intermediary is a person who is a supplier who is enabling the supply of the goods or the supply of services between two or more other parties, but it does not include a person who is supplying the main service or supplying the service on own account. I give you an example. If there is a supplier in India, he may be involved for the purpose of doing the pre-sale and the post-sale activities. Pre-sale activities of doing market survey, market research, market intelligence, advertising, and the post-sale activities of supporting for the order fulfillment, tracking of the orders, everything being done for the foreign customer. Okay. In this kind of a context, he is doing these services directly to his foreign customer. He is not engaged in procuring the goods or services for his foreign customer. He is not making supply of any goods or services on behalf of his foreign customer. He is also not getting the powers to procure the goods or services or supply the goods or services on behalf of his foreign customer. In this situation, it is very clear he cannot be said to be an intermediary. He may be said to fall into the residuary category, wherein the place of supply would be the location of the foreign customer outside India. Wherein, if you look at intermediary, the place of supply is said to be location of the supplier. In my example, it would be India only and only if this person who is the Indian supplier is engaged in finalizing of the orders or for enabling the supply of goods or services by the foreign supplier or to the foreign supplier, okay, or to the foreign customer, as we would say. So, if the nature of services is falling into the support services category, okay, then we may very well conclude that place of supply of such service is outside India, also paid for in foreign exchange. When it is done under an LUT, it may be satisfying all the requirements to treat as an export of service, no requirement to pay GST. Corresponding credit may also be getting availed by the Indian supplier who is making such supplies to the foreign customer. So here I have covered one judgment, one advanced ruling of Visa of Global, which was not considering this aspect of supply of services done directly by the supplier to a foreign customer on his own account and not for and on behalf of somebody else. So that aspect was not covered, and to that extent this decision may not be in line with the provisions. Okay. Next, I come to another very important aspect, that is the cross charge versus IST. We hear a lot about the cross charge. What is said to be a cross charge? There has been a lot of confusion in the period of the last 2.5, close to 3 years after GST has been introduced about whether it is required to be done. First of all, what is cross charge? Is it required to be done by the different entities? How it is to be done? How should the invoicing be done? How should the valuation in the invoice be fixed? All these aspects are there which need to be looked into. Versus ISD, again, there is a lot of controversy, a lot of confusion on this concept as well. So now I go into the next part of our deliberations, which is about the cross charge versus ISD. If you look at cross charge under GST, okay, I would say that when there is a supply of goods or supply of services or both, not just between related persons could include even the group companies, associated enterprises, but also when there is a supply of the goods or services between distinct persons as specified in section 25, then made in the course or furtherance of business, even if it is done without a consideration, it is deemed to be a supply under Schedule 1. Now, who are these distinct persons? The branch offices of an entity, of a legal entity like a company. Let us say one is located in Bangalore, one is located, let's say, in Gurgaon. Then these branch offices would be treated as distinct persons under GST. Here we may also say, what is a branch office? What is this concept of establishment? So for this, we would have to say that a branch office or an establishment which is set up is nothing but a space, the premises, which is having the human resources, also the infrastructure, including the office infrastructure, the internet, the intranet, telecommunication facility, as well as the other day-to-day requirements for running an office, for receiving and supplying the goods or the services, that would be considered in a common understanding also to be a branch office. So when there are such offices of the same company, of the same concern or the same entity, though it is covered in the same PAN for income tax, however, when these different offices located in different states are making any supplies to each other, even without a payment of any consideration, even without fixing of any consideration, it is deemed to be a supply, deemed to be taxable under GST, even with effect from July 2017 onwards. However, at this juncture, one more point which may arise for us is whether it can be said that even the services which are given by an employee to employer in the course of furtherance of the business is said to be something which is taxable or not. For this, the services by the employee to employer in the course of a relation to his employment would be covered in Schedule 3, which is setting out clearly that these kinds of activity or transactions is neither considered to be a supply of goods nor as a supply of services, and similar to the sale of land and completed buildings, it is also excluded from the GST levy. But then there had been a landmark, one ruling which had come, of course, in a case called Columbia Asia, which many of you may be aware, wherein this said the employees who are doing the activities at the corporate office, even though it is in the course of or in relation to employment, the employees employed in the corporate office are providing the services to the corporate office. Hence, there is an employer-employee relationship only in that particular location. When it comes to the other offices, these are distinct persons because these are different establishments, different offices, and therefore the employees have no employer-employee relationship with other offices. Consequently, it was said that there is a supply of these services by the branch office or the corporate office from one state concept, considering that the services by an employee to employer in the course of that the supply done by the employee sitting in the corporate or the head office to the branch office, which is located in a different state, it should be treated to be a supply of services done by him from this office, let's say in Bangalore, to continue with my earlier example, to an office in Gurgaon. Okay. However, I would say that till this Schedule 1 entry is there, certainly the department may go ahead with this view and say that if there is an employee who is sitting, let us say, in the Bangalore head office and he is engaged for the purpose of some accounting support, software support, or is giving some HR admin support to the branch office, let's say in Gurgaon, it would be construed that it is a supply between distinct persons which is happening from Bangalore to Gurgaon, and consequently it has to be offered to GST, more specifically to IGST, tax invoice to be raised, tax to be discharged in respect of the same, even from July 17 onwards. This will certainly be the view of the department. Now, we come to the other important aspects as far as a cross charge is concerned. Cross charge is in simple way, if I have to put, a distinct person within the entity. And keep in mind, even if there is a stock transfer of goods, let's say from a office which is located in Pina, the manufacturing office, to the branch office which is, let us say, located in Gurgaon, then it would still be construed to be a interstate supply. It would be still treated as taxable to GST, IGST to be charged by the supplying location. Credit may be availed by the receiving location to the extent used for taxable supplies or to the extent used for exports, etc. Okay. Similarly, for the services as well, as I just explained it to you, what will be the valuation of the invoice? So here, if we look at the supply of services by one branch office to the other, by the head office to the branch office, by the branch office to the head office, because sometimes even the branch offices may be engaged in giving, let us say, marketing services. A branch office, which is, let us say, of Delhi, may be engaged in doing marketing services for the head office of Bangalore, which is engaged in making supply of aeroplane parts or aeroplane components. In that case, there is a service which is being supplied of the nature of marketing or sales promotion being done by the branch office which is located in Gurgaon or Delhi to the office which is located in Bangalore, and GST needs to be discharged on this transaction as well. Here, if we were to see how to value these kinds of services. So if we are talking about support services being done by the head office to the branch, or let us say, to continue my example, the marketing services by the Delhi office to the Bangalore office, the valuation could be based on the open market value of the same or similar service if it's given to an outside or a third party. But sometimes there may be no open market value at all. There may be no such same or similar services being given, because this Delhi office may be only doing the marketing solely and only for its HO in Bangalore. In that case, where is the question of open market value? Then next we should look at the concept of cost of the service plus 10% loading. Okay. What may be said to be the cost of providing this service and 10% markup on that. However, there is an enabling facility also which is being given. The enabling facility which is being given is that wherever the receiving location can take a credit, in that context, you need not be bound by the cost plus 10% or by the open market value also, or the value of the same or the similar services. You may directly go to whatever is put in the invoice as an invoice value. That will be deemed to be as the transaction value. IGST to be charged on that. Credit can be taken by the receiving branch or the office, and to the extent used for making its taxable supply. But herein, one more very, very interesting aspect which comes up is, what if the receiving branch is also doing some exempt supplies, like it is doing some supplies of different kinds of spices, certain kinds of vegetables which are exempted. In that case, what happens is that the full credit cannot be taken by the receiving branch. Therein it becomes imperative that the valuation of the service may have to be done based on the cost of the service plus 10% markup. And how this value of the service is arrived at may become very, very crucial or critical. It may be, for example, if I have to say, if there is a cross billing required to be done or a cross charge required to be done for the usage of software, usage of the accounting package, usage of the HR function, then probably based on the cost which is involved for these. When we say HR, maybe the remuneration paid to these employees could be a basis to see what is the hours they are spending for the HR activity, for the admin activity, for the branch which is located, let's say, in Delhi. If it's the marketing service which is being done by the location of Delhi, then Delhi may like to map and see what is the hours spent by its marketing team, what is the remuneration of its marketing team. So that could be a starting point to arrive at a value. Because just because the invoice value is acceptable when receiver can take a full credit does not mean that just about even some unreasonable amount should be put, because that may get questioned, telling how was this value determined. So let it be more or less a reasonable value wherever the receiving branch can take a credit, but let it be based on some fixed parameters. Like for marketing, if it's a marketing service cross charge which is being done, see who are these resources, what is their time spent for the marketing effort for the head office in Bangalore. If it is the support service done by Bangalore to the branch, which is, let's say, in Delhi, then we may like to see what is the cost of procurement of, let's say, the software licenses. Out of the total procured licenses, how many licenses in numbers in value terms are used by the Delhi office? Accordingly, the cross charge may be calculated and done. It is also a fact that till date, very, very few SSCs have put in place a system to cross charge or use the IST option. Most of the entities would not even be aware. They would have heard something that there is some Columbia Asia decision. They would have heard somewhere that they can do a IST cross charge is required, or an ISD registration is required. Is one ISD registration required or multiple ISD registrations required? So there will be a lot of doubts. Consequently, nothing may have been done. This is something which we do come across, among several of the SSCs. So wherever it is identified that there is a supply which has taken place by one of the branch offices or a head office to a branch or an office in a different state, may be required to capture the valuation, as I explained a little earlier, and raise an invoice. And preferably going forward, at least a monthly invoice may be raised. But for the past period, maybe for the last 2 years, maybe one invoice for the last each of the financial years may suffice. Valuation, I've already explained about that. So regularize the past, and going forward, probably a monthly invoicing could be done. The receiver can take credit. No need to make a payment by the branch or the HO to each other within 180 days in order to enable this credit to be taken. Okay, next. What is some other important aspects which we may like to look at? Taxpayer may like to relook at the understanding, look at the policy with the branch, because sometimes they may think even if we make some cash transfers, fund transfers also, it's taxable. That's not the case. If there is no supply of the goods or supply of service, only fund transfers are being done to augment some shortage of cash at the other location, does not automatically mean cross charge is required. However, look very closely at the transactions and policies. The reason is very clear, because if you see the supply of goods, it is done under a invoice, there will be a e-way bill which is generated. So there is a proper underlying trail which can be tracked to see where the goods were supplied, when it was supplied, why it was supplied. All these things are possible. But if we look at a cross charge in the context of services, which is what we are focusing on, becomes very difficult, first of all, to determine what is the service which is being given, by which location to which location, when was it given, where it was given and consumed by which location. So the organizations may need to track these aspects, treat each and every unit as a separate cost center, see what are the various expenses which are being incurred at a particular location, like say head office. For example, see what was the actual cost incurred which is actually attributable to the other branch located in a different state. Accordingly, see whether cross charge required to be done, or whether a credit distribution to be done based on the ISD registration, which I will also be looking at. Cross charge may be done when there is some accounting expense, there could be top management expense, there could be advertisement expense, sales, marketing expense, like I said, finance, admin, treasury charges, cash management, legal, audit fees, tax management, consultant fees, royalty, license, various charges could be getting cross charged. Here, one more specific aspect which comes up is, what if there is any procurement of any service which is done by the head office, but the entire advantage goes to the branch. Example, an advertising service procured, but actually the entire benefit is taken by the Delhi branch office, because it is solely relating to the supplies of goods done by the Delhi office. The advertisement which was put forth is only relating to the Delhi office. Then, first of all, can it be cross-charged at all? Why? Because what is the fundamental thing I said a little earlier? There has to be a supply of goods or service. Without a supply, you cannot just simply raise a invoice telling it's a cross charge. Question comes, did the supply originate from that particular head office, for example, which got the invoice for the advertising expense? Answer may be no, not actually. But another way of looking at it could be, yes, it was procured. So the procurement service has been done, it has been procured and passed on. So consequently, cross charge can be done. This is a debatable matter, let me say. But if you come a little further, I've given one example for cross charge. Next, I will go to ISD after this. Herein there is a XYZ company which has a head office in Mumbai, Maharashtra, which is following a centralized billing and payment. It has 2 registrations in GST at Delhi and Karnataka. It has taken certain support services of IT, software, and it has paid GST. But these support services would be used at both the locations, that could be at Delhi and as well as at Karnataka. So when the head office, let us say, is having, instead of IT software, I will also say accounting service, which is being supplying to the respective locations, then it shall be required to supply under an appropriate invoice, cross-charge the value, and accordingly the receiving Delhi or the Karnataka registration will be getting to take the credit. Valuation could be based on the open market value, based on the same or similar kind of the services, or cost plus 10%, but where the receiving location is fully eligible to take credit because it is also engaged in doing taxable supplies, then the value declared in the invoice would be deemed to be the open market value of the transaction and accordingly may be proceeded. But I would still suggest arrive at some reasonable basis and do the cross charge, so that it can be justified not just today, but even to a department officer at the time of audit, maybe after some 4, 5, 6 years. Okay. Now I come to the concept of a ISD, Input Service Distributor. Again, like I said, this is something which is having a lot of confusion surrounding this concept. But if I put it in a very, very simple manner, I would say an input service distributor is nothing but an office of the supplier of goods or service. So it is nothing but an office which is receiving the tax invoices which are issued towards the receipt of input service, not for the goods, only the input services, and issues a prescribed document, that is the ISD invoice, for distributing the credit, which is the tax paid on these said services, to a receiver who will be again a branch or an office of the same entity which is having the same PAN number as the ISD office. So example would be a corporate office may be located in Delhi, one branch in Mumbai, one in Bangalore, one in Chennai, one may be in Hyderabad. Point which comes up is the corporate office which is there in Delhi, it is going to be receiving the 2-3 kinds of the invoices from the vendors. It may get the invoice relating to the advertisement expense which is pertaining to Chennai. It may be getting the sales promotion expense bill which is relating to both Chennai and Bangalore. It may get the audit fees bill which is relating to all these Mumbai, Bangalore, Chennai, Hyderabad. Now the question comes whether this credit has to be distributed to all of them equally or it has to be distributed to any one of them, how it needs to be done. Because keep in mind, in a simple manner, if you have to understand, a ISD is nothing but like a post office. He is that office, which could be a corporate office, which will be receiving the invoices for the input services, which is pertaining to different offices of the same corporate entity or the same entity or the business entity located in other locations or states, and distributing the credit based on where it was consumed. Where was that input service consumed? Which receiving location got the benefit of that input credit? Depending on that, distribution would be taking place. Now we will first compare and contrast ISD versus the deemed supply in Schedule 1. ISD, I said that in that context, there is a separate registration which is possible to be taken as ISD, which will only be acting as a receiver of all the invoices of vendors and passing on the credit to the respective location which is consuming that benefit of that expense. Okay? But in a deemed supply, it is a supply originating from the branch office and supplied to another branch office in a different state. So here, this is the major important distinction between ISD and a deemed supply. As per the Schedule 1, as I said, supply of goods or service even without consideration is taxable. So is it interchangeable? Whether ISD is mandatory, whether it is required to go for ISD compulsorily. I'll come to these aspects. Columbia issue anyway, I've already covered it up, so I'm not going to emphasize it again. So if I do a comparative study of ISD versus the cross-charge, ISD is covered on certain provision of section 20. Cross-charge comes from the schedule 1 entry, which I explained it to you in detail. The ISD mechanism is limited for the distribution of ITC on input service, but in a cross-charge context, cross-charge may be done with IGST even when a branch office supplies the goods. When in the context of ISD office is not supplying, or the ISD registration is not supplying any goods or service. It is only like a post office, like I said, passing on the benefit of the credit. But in a cross charge, there has to be a supply of goods or services. ISD is not creating outward supplies. It is only distributing ITC, in other words. Cross charge means there is a existence of a supply of goods or services by one branch to another branch, one establishment in one state to another state, wherein all these offices, all these establishments are part and parcel of the same entity and required to charge each other under invoice with applicable IGST. ISD, there used to be similar provision in service tax. So how can the credit be distributed? I don't want to get into too much of technicalities. I will just simply explain you the concept. If the distributor and the receiver are located in different states, credit of the CGST could be distributed as IGST and IGST as IGST. Credit of SGST also could be getting distributed as IGST by way of issue of the prescribed IST invoice. Okay. So what is the basis for the distribution? There has to be the prescribed document, which is the invoice, ISD invoice, which is given or issued by the input service distributor. It should be issued to the receiver, who is the beneficiary who has consumed that expense or got the benefit of the service. The credit distributed cannot be more than the credit which is available. And if the particular expense or the credit is relating only to one location, then distribute that credit only to that location. Coming back to my earlier example, advertising expense only for advertising about the Chennai location, distributed only to that location. If advertising benefit went to two locations, Chennai as well as the Bangalore, then distributed between both those locations based on the turnover basis. Okay. If it is audit fee, then it is used by all, Kolkata, Chennai, and also let's say by the other locations like Bangalore, then distribute to all of them based on the turnover basis. So turnover in a state, to aggregate turnover of all the locations who have used the service, the period to be considered for computation of the turnover is previous financial year of that location. And if there was no turnover in the previous financial year, then the previous quarter of the month to which the credit is being distributed, that turnover may be considered as well. The credit which is getting distributed, in addition, it has to be ensured that the credit which is getting distributed is not in the excess of what is available. And excess credit should not be distributed to one or more recipients. So it has to be ensured on the one hand that what more than what is available cannot be distributed, and also what is more than the entitlement. So if Chennai is entitled to say 50,000 of credit based on the consumption basis, only that 50,000 should be distributed and not the entire 1 lakh rupees of the credit based on the turnover based computation. And what happens if there is any such excess credit distributed, then probably the recovery with interest from the recipient of the credit would be a likelihood. So very carefully the credit distribution need to be done. Here I would like to emphasize a very, very significant aspect, that is whether the ISD is said to be mandatory. Department surely thinks so. There was a draft circular as well, wherein the department seemed to communicate or convey that a ISD registration need to be taken and credit need to be distributed based on the invoices of the vendors, wherein the benefit is derived by different locations or different branches. But in my view, can a circular bring in this mandatory requirement of a ISD? That to a draft circular, one which is not final. Could it be said it is compulsorily required to be done? Or else is it also possible, think about it, that the ISD is only one of the ways of ensuring that the credit is reaching to the correct consumer or the beneficiary of the credit? Should it instead be seen whether even the vendor billing, let's say a centralized billing to the head office, for example, say the software which is supplying or the software license is supplying, could it be said that this is being procured and then onward supplied by that particular head office to the branches in different states? In my view, IST, nowhere in the law it says it is mandatory. But yes, there are two schools of thought, one saying that it's mandatory. So wherever the SSC wants to take an extremely cautious approach, probably they may like to take an ISD registration, distribute the credit which is based on the other vendors' invoices, which is received by them, but relating to the different locations based on the formula I just explained it to you, or the mechanism which I just explained it to you, but then only to the cross charge in respect of the services which are supplied or originating or emanating from that head office. Example, admin services. It could be some HR services which are directly being provided by the resources, for using the resources of the head office to the different branches. Okay, but in my view, it's a defendable proposition even if these vendors' invoices, the advertising expense credit is taken first instance by the head office and then cross charged to the respective location which got the benefit. Okay, and it's a much simpler mechanism as well when you compare it with the ISD, because the ISD in turn involves a lot of cumbersome computations which are required to be done. There is separate returns requirement to be filed. So I would say the cross charge is a much more friendlier measure as against the ISD. Coming to the ISD, one illustration also, which I have given it here. I will just take you through this particular illustration. The corporate office of GK Exports is situated at New Delhi with different units which are registered in the various states across India at Bangalore, Mumbai, Kolkata and New Delhi. The software license and upgradation of software service is received and used at all locations. However, invoice is being addressed or received by the corporate office. So the corporate office in this particular example is acting as ISD. So it is taking a registration as ISD to distribute the credit. So in this, to continue the example, the value of service received is coming to 20 lakhs. Then how will the credit be distributed to the recipients? So on that, first and foremost, GST is applicable at 18% on the vendor's invoice pertaining to the software's services. Based on the registration wise, the turnover also details have been provided by us. For Delhi, it is coming to 75 lakhs, for Bangalore to 50 lakhs, Mumbai to 85 lakhs, Kolkata is 40 lakhs, total is coming to 2 crore and 50 lakhs. Okay. Herein, if I see manner of distribution of the credit, continuing with the same example, credit to be distributed is 3,60,000. What do we need to do? We need to take a numerator of the respective locations turnover. Denominator will be comprised of the total of the whatever is the aggregate of the turnover into the credit which is to be distributed. Now keep in mind, why are we distributing this? Because it is attributable to all these locations of Delhi, Bangalore, Mumbai and Kolkata. So if we do that on a pro rata proportionate basis, proportionate to the turnover of the respective recipient divided by the aggregate turnover, then we are coming to a respective breakup which has been given here. So Bangalore gets 72,000, Mumbai 1,22,000 and odd, Kolkata 57,600 and 1,08,000 for Delhi, totally adding up to 3,60,000. So in this, how will the credit be available to all the recipients? Will it be as a CGST, SGST or as a IGST? So if I was to see here, keep in mind Delhi also has a separate registration which is there And in respect of the Delhi recipient, it is located in the same state in which the ISD is being located. So the attributable ITC which is there in our example, which we saw, 1,08,000 will be distributed as CGST, SGST, 54,000, 54,000. And for the other recipients located in a state other than ISD, the attributable ITC will be distributed as IGST, as Bangalore, Mumbai, Kolkata will get a proportionate amounts which will be distributed to them on account of IGST. So here, if in this same illustration, the software is only used by Bangalore and Kolkata. Here I draw your attention, I said we are distributing this based on where it has got consumed, where it has actually got benefited. So therein, if I were to see, if the software is used only for Bangalore and Kolkata, then the total amount of the ITC will be attributed as IGST only among those two locations. We will be considering only the turnover of those two locations, which is 50 and 40 lakhs, coming to total of 90 lakhs. So the 3 lakh 60 as 2 lakh and 1 lakh 60,000 would get distributed. With this, I have come to the end of the entire deliberations of today's seminar. Please make a note that there will be a separate session which will be there in one of the upcoming webinars, which will specifically cover about intermediary services and its related aspects, care to be taken in the agreements, and the specific nature of the transactions when it is treated as an export of service, when it is treated as taxable to GST. Please do log in for that as well. And now next I would be opening up for the queries which have already been shared by our various delegates to us. But before I close, I would like to bring up a very, very important aspect. Wherever possible, ensure as a SSC, ensure as a taxpayer that the nature of your activity, what is the nature of the supplies done, what is the tax rate applied, classification adopted, exemptions which are being claimed, kindly put it into the record. Send it wherever you have a doubt, especially send it by a registered post acknowledgement due letter to the department, setting out the nature of the activities, mentioning therein what all is being done, what are the tax rates being applied. Ask them for a confirmation whether what is being done is correct or not. And if there is any mistake, do let us know. Why I am telling you this? Because once every information has been voluntarily provided to department, even if any issues are raised after some 3-4 years in the course of audit by department, it may be the entire demand could get dropped because it is being hit by limitation period, because the extended period of limitation cannot be invoked when there is bona fide belief and when all the information has been provided by the SSC to department. So now one by one we'll be taking all the queries which we have received. Thanks a lot for your patient listening. Thanks.